Hi, everyone. Welcome to Market Insight for the week of July 1st through the 5th, 2024. So starting with our monthly chart, our top-down approach, excuse me, as we usually do, the monthly continues to show bullish behavior, holding high above its supply line and ignoring basically its overbought position. Well, that's the market for us, right? It does what it is going to do. But this is the completion of June, and we see the month closing firm with a little less volume than the last few months, though not dramatically different. So the monthly continues to be bullish. But keep in mind, it's the lower time frames that will turn first, right? So logically so, the smaller time frames have to turn before the larger ones do. So let's turn now to the weekly chart. And we see the weekly is interesting. We have a small pullback here the last week of May, and that brings the market down to 52. Then we rally all of June. The whole month of June is just a rally month. So instead of up thrusting here, this resistance that was put in late March, early April, instead of up thrusting, we didn't up thrust. Instead, we held the lows and then start to rally. And the market broke out that first week of June and rallied to new all-time highs. So the first week of June closes back up above resistance on a pickup in volume, on an increase in volume. That's bullish. Second week, we see a little test. If on the daily, we tested back down to 53.33, and then the market pushes higher on expanding volume. Very bullish. Let's erase this. And so then prices on this bar, we've got expanding volume, prices keeping pace with volume. This is bullish behavior, not effort versus result. Very nicely bullish. So on the third week of the month, the rally continues, but notice we get less volume and we close off of the highs. It suggests buyers are tiring out up here around the 55.88 highs. And then last week, we get a narrow range inside week, right? We're inside the week of the prior, we're inside the range of the prior week, and it's a narrow range, narrowest range than what we've seen in a while, and with a slight pickup in volume. So what this says is buyers had trouble getting over 55.88. And sellers saw this and came in, and we know that they came in on Friday, and we'll see this as when we turn to the daily chart in a moment or two. But we see that on Friday it came in, the selling came in. So is this then the question becomes, is this the beginning of a larger reaction that might lead down towards, God damn it, down towards the breakout level of 50, or are we gonna hold in here and go higher? Well, we'll find out. Let's turn to the daily chart. So on the daily, we've been in a strong trend run to the upside since the lows of May down here. Note that when we came into the 55.33 level here, the highs, we came in strong. We had a good rally up into here. And then we had a normal pullback into support. This was the turning point here around 52.13. We highlighted that. Came into support and then resumed the rally, pushing higher. And then it rallies up strongly, pushing up into the resistance here into 53.50, 53.30, 53.70. We get some absorption in here and then pushes higher and rallies strongly up into the top of two daily trend channels. We've got a larger trend channel from the lows of May, and we have the supply line here. And then we also have the more immediate uptrend channel starting here at the very end of May into early June and containing the rally through most of June. And that supply line is up in here. So those two supply lines are intersecting in here. And we call that confluence, excuse me, a confluence of resistance here, which naturally is stronger than either one of these resistance lines alone. And the market naturally starts to react to it. Not a surprise. Okay. Now, a week ago, Thursday, the market gapped open. Now, that's really due to rollover, not because they were, but it was still strong at that point. And that comes into, they gap up into the resistance of the two supply lines, and then we see a poor close on a pickup in volume, right? And so, and then Friday reacts down to 55.19, and this level becomes really important. And then Monday sets the low at 55.10. This sets the low of this trading range, at least thus far, at 55.10. And so these two lows, Monday's 55.19 and prior Friday's 55.19 and Monday's 55.10, they contain the action, price action for the rest of the week down here at the lows. Tuesday, Wednesday, and Thursday all show similar behavior. We dip down into the low support area between 55.19 and Monday's 55.10. We dip into that area and then rally up and close on the highs. So this looked like buying, right? And then Friday, buyers try to make the attempt to push prices higher, but they got rejected at the top of the trading range with selling pushing the market down pretty sharply back down to the trading range lows. So the question becomes, are we about to go into a larger reaction, come down into this area maybe, or will this area hold and we see higher prices? We'll come back to this in a bit. First, let's take a look at the higher time frame charts. I want to take a look at the yearly and the quarterly along with the monthly because June just closed. June's the end of the quarter. So with the quarter just closing, it's a good time to review the higher time frame charts. And so for this, we always use the cash index, the SPX, and the SPX.X. And the reason we do that is because, excuse me, it avoids the rollover issues that we have to confront when we use a futures contract. So the yearly is on the left over here, and it's looking strong, right? The current bar range, well, the current bar range is narrower, right? But we're only in June. We're only 6 months into the year, so we can't read anything into the narrowness of the current bar at this point. The thing to notice is that we pushed down in 2022, right? But didn't follow through to the downside. Instead, last year, 2023, even though it was an inside year, we push up and we close higher, and that's bullish. And so we're seeing bullishness in here on the weekly. The quarterly is also bullish. It's just broken out of the resistance level here, the 2021 resistance, those yearly highs. And then that's 48.08, I think, if I'm not mistaken, and drove up higher. And we see both quarters pushing up nicely. Volume is keeping up nicely. There's no excessive volume here. There's no super light volume. It's not no demand. It's not excessive, just strong bullish behavior. And the same thing with the monthly, as we've been talking about with the futures contract. There's really nothing negative on the monthly chart warning us of a larger reaction. Everything has a positive look at it, although the monthly is overbought, right? Note too, and this is important, that it will take weeks and weeks to change this market from up to down. And there's no evidence at this point that we've even started a larger reaction, right? So very bullish conditions in this market at this point. Let's turn back to the daily charts and let's take a look at the major markets before we start wrapping up here. So as we noted last week, the Dow here in the middle, this is the Dow futures, the YM. NASDAQ is down below and the S&Ps are up top. So as we noted last week, the Dow is the weakest, and the S&Ps and the NASDAQ were both breaking up to new highs, and the Dow is still under its all-time highs there, under its recent swing highs. And this weakness continues this week as well, though I know that the Dow didn't close as poorly on Friday as either the NASDAQ or the S&Ps. The other two markets closed down on its lows. The Dow closed off a bit, right? It bounced up a little bit higher on Friday. Also note that the NASDAQ is holding well above its support compared to the S&Ps or the Dow. So one thing to do next week that I'm going to do is I'm going to be watching the NAS and the Dow next week, especially around the lows and the highs of the trading range. If the Dow and the NAS hold higher early next week, or even better, they flush or the Dow flushes and then comes back up, maybe the NAS isn't able to get all the way down there to its support. But if it can flush and recover, then we've got clues of bullish behavior. And likewise, if the Dow in particular starts breaking down below the lows here, below its support, then we're probably into some sort of a reaction, and we're about to head down lower. So the major markets will be useful to watch this week coming up. Let's turn to the daily chart of the S&Ps and see what might occur here. So Friday closes on its lows near the bottom of the trading range, and the obvious question, will it follow through to the downside, or will it hold the trading range lows, or even better, will it flush those lows and then come back up and recover 55.19? That would be quite bullish. So that would be one thing I'm going to watch for. Flush underneath the lows on Monday, Tuesday, recovery back up to 55.20, 55.19, and that would indicate potentially a return back up to the top of an attempt to return back up to the top of the trading range. If we start breaking down below 55.19, then we'd be thinking shorts, maybe for a move down below 5500 with targets, and I'll show you those targets in a minute, at 54.85, 54.75, and 54.50 being those targets. We can also just chop around for a few days, and maybe that's more likely what's going to happen. No, I don't know. No one knows what's going to happen for sure, right? Let's take a look at the 240-minute chart and drill down a little bit. So you can see, and I'll explain this chart, you can see that 55.19 level right along here, how much price contains it on Friday, and then again the overnight, prices containing it here, and then in here as well, and then on last Friday, when we hit there and we bounce off of it. Note the nice close off of that level. So this is a really important line. You can see how frequently this level was tested, and so it's really important, okay? Now, as I say, on Friday, we came down to the same level and bounced off of it, and so we see, again, buying coming in at that level. So we can chop around here, as I say, for a few days. I've drawn two brown trend lines here on the chart, and they're starting to form an apex or a triangle, right? Now, I have no idea if an apex will actually form or continue to form, but we can start to see the outlines of the beginnings of it, potentially. And so we can watch to see if it does form. Now, if it does start to form and we have an apex in here, we we kind of narrow down those swings, right? And that's what we'll see over the course of several days. The swings will narrow down, and we would get really tight into that apex and come back somewhere into the middle, probably around 55.50, give or take. And then we could see a push up and obviously take out 55.88 up to new all-time highs, 55.60, 55.25. Those would be the targets there. And by the way, the targets to the downside here would be 54.84, and then 54.74, and then 54.50 is down below that. But it's the reverse use of trend lines here that give us that support level, and then this little modest support here for that level as well. So that's what I have for us this week. Let's see what's coming up on tap for this week. Helen's got meditation classes only on Tuesday this week because of the holiday. She'll be making that Friday, the second class up on next week. But the first class will meet on Tuesday, the second at 7 p.m. as it usually does. And then we'll have deep practice. We won't have it on the 4th of July. That's Thursday. That's the holiday. We'll instead have it on Saturday morning at 10 a.m. Eastern time. So Saturday, July 6th, 10 a.m. Eastern for deep practice instead of July 4th, the holiday. So everyone, have a great rest of the weekend and enjoy the holiday if you're here in the U.S. It's a big time for us. Summer is starting here in the Northeast, or in North America, excuse me. So enjoy it, and I will see you next week in meditation and in deep practice. Everyone, take care. Bye-bye.